Ladies and gentlemen, welcome. My name is Alex Dworkin and I'm managing partner at 4D Capital. We specialize in a very unique mathematical approach to the stock market where we analyze the market and individual stocks in multidimensional space. And when we do, essentially perfect order emerges. On top of that, we've developed a number of very powerful timing indicators, and when we combine both of those together, we can very often predict exactly what the underlying equity or the overall stock market will do in both time and price, and we can typically do it on multiple time frames. I personally believe our work is nearly identical to what Jim Simmons was able to accomplish at Renaissance Technologies, if you're familiar with Jim. So today we're going to be looking at Target Corporation. Target Corporation is one of our 52 mega cap stocks, and we've been following it for a while. As a matter of fact, we've been projecting a very important bottom for the stock for a while. So we'll look into what's going on with that stock and whether or not we were able to go into a long position that we've been kind of anticipating to happen within the stock. So before I do, very quickly, we basically specialize in identifying stocks, or we're looking essentially for the next Bitcoin, Apple, Tesla, Nvidia, and so forth. Stocks that will appreciate 2x, 5x, 10x, and do so within a relatively short period of time. And our secret weapon in, obviously everybody wants that, right? But our secret weapon in identifying such stocks is our software that has been built on top of our mathematical work. And essentially what we can do, we can scan the entire S&P 500, for example. And what we're doing, we're calculating and we're looking for very important upcoming bottoms, because as you know, it is from those bottoms that we can anticipate those 2x, 5x, 10x. It is very difficult. We can identify the tops, but it's very difficult to generate those kind of returns on the short side of the market. So we're looking for those very clear, important bottoms, and then from those bottoms, our software can already project and calculate exactly how far the stock's going to run and within what time frame. So what we can essentially do is we can pick out the best opportunities with clear bottoms and then subsequently significant run-ups in the stock price that that particular underlying equity is about to experience. So we have a 30-day free trial associated with our work. That trial is going to expire at the end of this month. We're going to do something else. We're no longer going to offer our work for free because there's just been too much hustle and interest in terms of that. But we're moving towards a little bit of a different model. So if you still want to get access to our work for free over the next whatever it is, 15 days, please request. The link is in the description of this video, and then we'll set you up. Otherwise, once you log into our system, you can essentially see those stocks. We call them super equities. We can call them fast movers, sometimes a little bit different configuration. We also follow these 52 mega cap stocks that I'm going to talk about Target here in a second. And we also follow the overall stock market and tell you exactly what the overall stock market is doing. So with that in mind, let's just shift gears into Target. Those who follow us know we've been following Target for quite some time. We've been projecting a very important bottom for Target, and it has triggered, basically I believe our last report was in June of this year. So once again, this is an update for Target Corporation. And at that time, we were looking at two possible targets. One of them was $86 plus or minus $3. And then the secondary target was $72 plus or minus, I believe, $3 as well. So this particular bottom hit right into our target area at $85 a share, approximately. I think it was $85.66 or something like that, the actual bottom. And as you can see, our three-dimensional confirmation confirmed that this was a potential bottom for the stock. And once the bottom is put in place, then the stock is expected to appreciate quite significantly going forward. I'll talk about that in a second. Before I do, for those who are not familiar with our work, let me just very quickly explain what you're seeing here on the chart, the triangles, the lines. So basically these triangles at the top and the bottom of the chart is what we call cycle composites. And cycle composites is a very simplistic representation of a very complex mathematical concept. So what we do is we scan the chart back in three-dimensional space, we identify cycles, and then we project them into the future. What makes matter a little bit more difficult, there are typically multiple composites running on the bottom and the top. Of course, the top one is responsible for the tops, as you can see, and the bottom one is responsible for the bottom. But if you know how to put those composites together, you can very closely replicate what you see on the two-dimensional time and price chart. Okay, so that's the composite. They kind of get us into the neighborhood of an upcoming turning point. So for example, here we're a little bit late, actually quite a bit late. So the growth cycle has to be extended in this particular case. Doesn't happen very often, but it does sometimes. Is a perfect illustration of that. We also have what we call cycle clusters. And cycle clusters basically give us, let me remove it so the chart is not too complicated or busy, I should say. These cycle clusters get us into the actual date of an upcoming turning point. Once again, simpler representation, a complex concept. We scan the chart back in multidimensional space, once again, three-dimensional space to be exact, and then we identify those cycles. This time around, they are proprietary cycles, and we scan them into the future. So these are longer-term ones, and they give us the exact date. So this gets us into the neighborhood of an upcoming bottom, and those cycle clusters give us the exact date. So what we found over the time is that typically important turning points or short-term turning points, if we're looking at the short-term composition of any given stock, typically happen not when there's a singular cycle arriving, but when there's a multitude of cycles arriving at the same time. So the more the better, so to speak, and the longer the cycle, the better the cycle. So if we have 2, 5, 10 cycles arriving on any particular day, then we know that there's going to be an important turning point there. Whether it's the top or a bottom, that is guided by what the actual stock is going. Whether it's moving into the bottom, then it's going to be a bottom. If it's moving into a top, it's going to be a top. So once again, use Dow Jones as an example. In March 6th of 2009, there were 15 long-term cycles arriving within a 3-day time window. And if you know how this concept works, you would very well can figure out and ascertain that particular time juncture is going to be a very important turning point, and of course it was. So going back to target very quickly. So basically our overall forecast, we anticipate a significant bottom. I'll talk about prices here in a second. That's going to be associated with this major cycle bottom, and then subsequently, once this major cycle bottom is put in place, we anticipate the stock to increase quite substantially into this major cycle top, scheduled to arrive in early 2029. Okay, so that's the overall forecast. We're going to put in a very important bottom, and then we're going to surge much higher. So let's go back to our, by the way, the dots you see here are three-dimensional representation of what we call a point of force. This is typically, when we calculate it in three-dimensional space, we can very often project an exact turning point. And as you can see here, this particular juncture was a very good turning point for target. Now, I'm not going to discuss whether or not we took a long position at this juncture, but rest assured that this was a direct hit on our previously discussed point. It is located at $86 plus or minus $3. We hit directly into it, and from our perspective, this can very well be the bottom. Now, there is a secondary point. Let me show you here. So there's basically we were expecting a hit here, which we got, but there's a secondary point that is located approximately here at $72 plus or minus a few dollars. Okay, so there's a real possibility that stock is not done yet and will decline into this particular juncture, but for the time being, that's more of a matter of a trading decision as opposed to forecasting decision. Because as I mentioned before, the time cycle associated with this particular bottom is running a little bit late. So if this is indeed the bottom, then that would be much better as opposed to us declining even further into that $72 a share juncture. So once again, request a free trial. We give specific directions as well as trading advice and projection of exactly what target doing. So whether or not you're going to be able to see whether or not we took a long position right at the bottom, or we're still waiting for that $72 juncture to arrive in the future. So that would be the easiest way to determine whether or not right now would be a good place to get into the stock, because here's the best part. Okay, so not only can we project the bottom, by the way, these green regions, I know it doesn't make any sense to you. It makes perfect sense to us, so you're just going to have to trust with what I'm telling you here. So basically our software, as I mentioned earlier, can project the exact bottom, or in this particular case, two bottoms. Sometimes it's very clear in the singular bottom. Like for example, this, I will talk about this particular stock. which is Under Armour, over the next couple of days is going to be one of our upcoming fast movers. But this particular stock has a very clear, here, let me, as a matter of fact, remove this and I'll show you something very cool. It has a very clear bottom projection. So you see this particular green region, that's where it's going to bottom. And then once it bottoms, then it's going to go much higher. In case of Target, it's a little bit more complicated. But nevertheless, it's still a very, very good opportunity. Let me show you why. So not only can we project the bottom, we can project the top from that bottom. So let's assume that the bottom was put in place as we speak. And then we can essentially project what, and I don't have it set up right now. Let me see if I want to calculate a little bit. Let me move my window here. Bear with me for 1 second and I'll show you what this stock is gonna do going forward, what the top projection is gonna be. Okay, so once we know where the bottom is, we can project in both time and price where that bottom or how far higher that stock is gonna go. Okay, and this is what you see on the chart in front of you, these green regions. So we typically know from experience that this particular thin mathematical region is going to be broken, and most likely stock is going to increase into this particular juncture of let's see, approximately, let's say $400 or higher. Okay, but in my book, that's a really good return from, let's say, $85 to $400 a share. That's quite a return within a relatively short period of time, over 300%, almost 400%. So you do the math. And that's the power of what our calculations, our three-dimensional calculations, are able to do and able to project into the future. I'm not familiar with anybody else having any similar ability. So I think that's it for today. Thank you very much for your time. We have a webinar coming up tomorrow. Link in the description of the video. We also have well, free trial associated with our work that I already talked about. The link is there as well. And we have a lot of very cool stuff coming up over the next couple of weeks. So thank you very much for your time. Have a wonderful day ahead. We'll be back tomorrow with another update. Otherwise, bye-bye.